This short video will cover the Basic tab, which appears as a pop-up window when selecting a signal provider and adding them to your portfolio. You can allocate any amount to follow this selected signal provider, up to and including the total amount you have available left in your account, which is shown here. So if we allocated 1,500, we'll see instantly the change in the figures under allocated funds and available amount to reflect that selection just made. The maximum risk on allocated funds is the maximum percentage you are happy and comfortable risking by following this trader. If we set this at 30%, for example, what this means is that if the aggregate profits figure of both closed trades and open trades is at negative $450 and starts to fall below that, instantly any open positions still open will be closed, signals from this signal provider will be blocked, and you will no longer be mirroring or copy trading any more of his trades. You can remove him from your portfolio completely, or wait a period and resume receiving signals from him again whenever you wish. The volume control option allows a user to dictate the size of the trade they enter into in relation to the size selected by the signal provider per trade. To use a hypothetical example to illustrate this, if the signal provider's account size was $10,000 in total and you allocated $5,000 to follow this trader, when the volume control is at 100%, your trade size on each open trade would be half that of the signal provider's, and so on. This is what the phrase according to allocated funds to providers balance ratio means. After that ratio has been set, you have an added element of control by selecting the percentage of that ratio to be adjusted as well, according to your appetite for risk. So in this example, if we set this at 50%, then following this trader on $5,000 when he has a $10,000 balance will mean that each size opened will be a quarter of that compared to the signal providers. This feature here lets you know the maximum consecutive open positions opened by the provider, which in this case is 9 for this signal provider. So if we were to set our option to 5 consecutive open positions, what this means is that if this signal provider was to open 9 or even 10 consecutive open positions, only the first 5 of those will be copied into our portfolio. And finally, the price differences feature. Like the maximum risk option, it's a safety mechanism embedded into the auto trading system. In foreign currency trading, markets and prices can move very rapidly in a very short space of time. This selection here ensures that your open trades, after receiving the trading signal from the signal provider, will only be executed if they fall within, in this case, 10 pips of the signal provider's entry price. If you can only obtain a price which lies 11 pips or more away from that of the signal provider's price, that trade will not be copied into your portfolio. This ensures you are not disadvantaged in times of very high market volatility. The great thing here is, if the price movement is in your favor, then even if the price you can obtain is more than 10 pips away from the signal providers, then that trade will be copied into your portfolio because you are getting a more favorable price than even that of the signal providers. Once all your selections have been made, you can click Apply to add the signal provider to your portfolio and start receiving signals.